Hi everyone, welcome back. In this video, we're going to look at one of my favorite tools for turning a messy macro environment into a few clean trading signals, Principal Component Analysis, or PCA. We'll use real Indonesian market data. The goal is not to do heavy math, but to show how PCA can help us see hidden macro regimes that we can potentially trade. Let's start from the raw data. Here you see about 15 years of daily time series, Jakarta Composite Index, Indonesian Rupiah, Indonesian 10-year government bond yield, US 10-year yield, Volatility Index or VIX, DXY Dollar Index, and Brent oil. Visually, it's already clear that everything is moving, but it's hard to describe the common forces behind these moves. Sometimes it's risk off, equities down, Rupiah weak, VIX up. Sometimes it's more about global rates or oil shocks. What PCA does is it takes all of these correlated series and asks, can we describe most of the movement using just a few synthetic factors? Here is the scree plot of our PCA on daily changes of those variables. The first principal component, PC1, explains about 27% of the variance. PC2 adds roughly 20%. PC3 adds around 15%. By the time we reach PC5, we've already captured more than 80% of everything that's going on. So instead of tracking 7 noisy series, we can track 3 to 5 PCs and still retain most of the information. But this only becomes useful if we understand what each PC actually represents. Now look at the loadings charts. Each bar shows how strongly a variable contributes to that component. PC1 on the left. PC1 IHSG has a large negative loading. USDIDR and VIX are strongly positive. DXY slightly positive. Oil slightly negative. That pattern screams Indonesia risk-off factor. When PC1 goes up, equities fall, Rupiah weakens, volatility rises. When PC1 goes down, it's risk on. Equities up, Rupiah stronger, lower fear. So PC1 is a good candidate for a global risk/EM stress factor for Indonesia. PC2 in the middle. PC2, VIX is strongly negative. Indonesia and US 10-year yields plus oil are positive. You can read this as more of a rates and growth expectations factor. When yields and oil rise but volatility doesn't explode, the market is pricing stronger growth or inflation. PC3 on the right, PC3. The standout is DXY with a big positive loading. Indonesian 10-year yield is quite negative. US 10-year is modest positive. So PC3 looks like a dollar strength versus Indonesian duration factor, a more specific FX rates interaction. The numbers themselves come from the PCA optimization. Our job as quants is to interpret them and then test if those interpretations have trading value. Finally, here we plot the first 3 PCs as z-scores through time. When the line is near 0, macro conditions are normal for that factor. When it spikes beyond plus 1.5 sigma, we are in an extreme regime. Below negative 1.5 sigma is the opposite extreme. You can clearly see big risk-off spikes in PC1 around episodes like the Euro crisis, taper tantrum, and COVID shock. This is where it becomes interesting for trading. Example trading idea. For example, for an IHSG strategy, you could define risk-off filter. If PC1 z-score plus 1.5, treat it as a dangerous environment. You might reduce equity exposure, tighten stops, or demand higher edge before entering new longs. Risk-on filter. If PC1 z-score negative 1.5, you're in a strong macro tailwind. You can be more aggressive with long trades or let winners run longer. You can do something similar with PC2 and PC3. PC2 extremes could tell you when rate moves are overstretched. PC3 extremes could be an early warning on dollar shocks that hurt Indonesian bonds or FX. The idea is not that PCA magically predicts prices, but that it gives you clean, orthogonal macro factors you can plug into any model. Position sizing, regime switching, or even as extra features inside machine learning strategies. So that's a quick tour of PCA on Indonesian macro data. We looked at the raw series. We compressed them into principal components. We interpreted each PC as a macro factor. And we turned those factors into simple regime filters that could support trading in Indonesia. Don't forget to like, subscribe, and share this with anyone who loves quant and Indonesian markets. Thanks for watching, and see you in the next video.